What's up, everyone? Dylan here. I wanted to hop on and do another episode of the weekly introduction video. As always, I'm going to talk about the overall market analysis, some of the theses that I have, and we'll go over some other things too. So let's talk about the larger time frame picture of ES first. So I mentioned this in the Discord. I mentioned how I've been reading the last two weekly candlesticks on the weekly chart for ES. So I recommend looking at all of the different time frames on the major indices such as ES and NQ on totally naked charts. Okay, the reason for that is because if you look at it on, a chart where you have all like drawings, or if you use any indicators, it's going to look very noisy. Look at this, right? With all my lines and zones. Look at that compared to that, right? I mean, for me at least, I can't speak on everyone else's behalf, but this looks way clearer than this. So, like I said, I always make sure that I have the clearest view possible, and it helps me really, break it down and see through all of the noise. So with that said, looking at this totally naked chart, the last two weeks give a lot of color on the market, right? So the week of May 2nd, we can see a very large upper wick, okay? This clearly shows that sellers were in control, okay? We'll go to a daily chart and we could see that the 4,300 level acted as very, very strong resistance back in late April, early May, okay? So, 5 different days, in this stretch, there were 5 different daily candles that all tested 4,300 and failed miserably. And here we are down 300 points. And at one point, we were down close to 500 points from that 4,300 level. Okay, so you can see 4,300 acted as support prior, right? So this level has been a very important level in the past. Plus, it's a whole psychological number, which tends to gravitate, traders. So, with that said, if we look back at the weekly chart, we can see that the week of May 2nd opened at 41.44. Buyers were able to push value up 160 points from the open, right? As at some point during that week, but it failed miserably at 4,300, as I said. And then the bears came in and relentlessly sold that same weekly candle from 43.03 back down to close at 41.19. That's a big swing in 1 week to open up at, say, 4,100, go all the way up to 4,300, and then back down to 4,100. So, that's a lot of volatility there. But, as I said, looking at that upper wick, that shows that bears were in control. On the flip side, the week of May 9th had a long bottom wick, okay? So we go from a long upper wick to a long bottom wick. That's, very, very different, okay? So this is what I like to see, in regards to a bullish point of view. This is the candle that you want to see. Plus, if you really want to go deeper, we can say that this candle actually had slightly more volume than the bearish candle. So that's another really, really important factor for the bulls, right? For bottoming periods, you want to see that, that lower wick on higher time frames, whether it's a weekly chart, monthly chart, daily chart. You want to see that nice lower wick with volume backing it up, right? If this particular weekly candle only had volume such as this, it wouldn't be as significant. So, the fact that there's slightly, not by much, but there is slightly increasing volume on these weekly candles is a good sign for bulls. You know, does that mean we can't test the lows again? Of course not. But I'm just kind of piecing together different context clues that I've been noticing. So like I said, we had this upper wick and then we had this bottom wick. And if you look at the weekly chart, we had 5 consecutive weekly candles that were very, very bearish, right? Especially these ones, 4, where these three candles closed at the lows, right? When you have a weekly candle closing at the lows, that's very bearish. On the flip side, when you have a bullish candle, a green candle closing at the highs, such as this, that is a bullish sign. So these three candles close right near the lows. And then this one, the reason that this is so bearish is because of that upper wick. Although it had a lower wick as well, the upper wick was way bigger. Okay, so 4 very, very bearish candles followed by a better candle, okay, for the bulls. So what this shows is that bears pushed value down to 38.55 from 4,080. So from the open of that weekly candle, bears push value down 200 points, but the bulls were able to rally from 38.55 to 4,020 where it was closed. So what is that? 170 points, give or take, from the lows up. So not only were bulls able to rally, but they were able to close further from the lows, which is very, very important. Okay, so we had this nice basing candle, or not even base, it's kind of like a bottoming candle. Like I said, you want to see that long wick. Volume's decent, it's not great, but I do like that candle structure, right? It's kind of like a hammer, people call it. I don't really coin different, phrases to candles, but I believe this is a hammer. And then it's followed by a nice bullish candle, right? Then today was basing, right? Today was very boring. It was like watching paint dry. Hopefully we get kind of like an RBR, right? Rally, base, rally today. Obviously time will tell, but there are a few different things that I'm looking at that could provide some, a nice bid in the market, and I want to talk about those. So same deal, weekly chart on NQ, same exact candle structure, right? We have the upper wick here and then the lower wick here. So another thing that I liked about this one in particular for NASDAQ, we have this 12,281 level, right? It was clear resistance. Like I said, this is a weekly chart, so it's a big deal. Clear resistance here, here, and here in late 2020. Then that resistance became support, right? Here and here. Then, so bears were in control for the earlier half of this week, last week. And then I do like how bulls were able to close that weekly candle above that 12,281 level. So ideally, we're retesting that 12,281 level now. Ideally, I would like to see, bulls, push value away from this 12,281 and hopefully, be able to potentially test this support level up here. So, like I said, we'll see going forward, but that's something else that I noticed. So, in regards to some events this week that are, that could really start to, give some equities a nice bid. Fundamentally, we have Walmart earnings tomorrow before the market open. This could be a big one because Walmart will provide crucial color into several macro topics, including the health, of the consumer, inflation, spending, hiring plans. There's a few different factors that it will cover, and it could give some, color of some of the economic data that those algorithms look for. So that's probably the biggest event happening this week. And then we also have the Shanghai news. So I talked about this last week and then today as well. So I wrote some stuff down for the Shanghai, stuff, and I'm just gonna kind of read it off. So these are like my condensed thoughts. So a large portion of the Shanghai's manufacturing infrastructure is already back online, but additional restrictions will be eased in the coming days, and the area should be back to normal by the opening week of June. While Fed tightening, inflation, and higher rates justifiably receive a lot of blame for the market slump, the world would look a lot better if Shanghai hadn't underdone a COVID shutdown. Okay? Removing the China overhang would put the U.S. economy in a much better position to withstand the Fed tightening. It will also make the Fed's life easier by alleviating some of the inflation pressures. The longer supply chains stay stressed, the more pressure monetary policy officials will be under to rapidly withdraw accommodation. Judging off some of the largely weighted equity Q1 earnings reports, such as Apple, we could note that China played a much larger role than the Fed in regards to the companies issuing cautious guidance. To the extent companies during the Q1 reporting season expressed caution about the outlook, it was nearly entirely because of China rather than higher rates. This is why the recent news from Shanghai is so encouraging, and it should help the overall global growth, which will translate into improved equity sentiment. Like I said, there was a bunch of different things that I've been reading, in regards to news headlines and just, there was a lot of details. So, hopefully that helped. That's kind of like the condensed version of what I had to say regarding that topic. So essentially, in very few words, I do believe that if Shanghai goes back to normal, right? They've been in a massive lockdown because of COVID. They have a zero tolerance approach, which I've talked about in my other videos. If they alleviate that, right? If they go back to quote unquote the norm, I believe that this is bullish for stocks. Okay, so if you want to replay what I just said, feel free. But that is where I stand. And so Walmart earnings tomorrow before market open, right? Tomorrow morning, not after the close, but tomorrow morning. And the whole Shanghai situation, I believe, will give stocks a boost and some support if all goes well, right? So another thing with Russia and Ukraine, obviously that has not ended. It's still happening. But something to note, maybe something happens soon. I'm being hopeful, but I also read that Putin is very ill with blood cancer, according to an oligarch close to the Kremlin. The oligarch said, "We all hope Putin dies." So if that does happen to be the case, I do believe that that will also provide a nice bid for the market. Like I said, is he going to die soon? I don't know. I hope he does. But let's see. So that is where I stand fundamentally. We'll go back into the technicals. So here is the bigger picture. I'll talk about VIX very soon, but we'll go back to this chart that I was showing you guys last week. So go to a weekly chart, all right? This weekly chart is very, very important. So the lower time frames you look at, the more details you'll see, and details we can make the argument that more details equals more noise. So even on an intraday perspective, like a 15-minute chart, this is a lot of noise, right? This doesn't really give you much data in regards to the overall picture of the market, right? This is just, there's no conviction here, and me and Carmine were saying that today, right? You go up, you go down, up, down, up, down, up, down. It's just a lot of noise. So something that I've been doing much more recently, in the last 3 months or so, I've been only looking at higher time frames during the day. So I used to look at 5 and 15 minute, and I would just kind of go back and forth between those two. But now I find myself, focusing on the larger time frames throughout the day. Don't get me wrong, I do look at 15 minute, 5 minute to see, different context clues, but I'd say 80% of my day for ES, I look at 4 hour, I look at 690 minute. The reason behind 690 minutes is because ES is open for 23 hours in the day. You divide that by half, you get 11.5. I believe 23 divided by 2. Yep, 11.5. You multiply 11.5 times 60, right, minutes, and then that gives you 690 minutes. So essentially, using the 690 minute, you get 2 candles per day, okay? So one candle is the first 11 and a half hours, and then the second candle is the second part of the full ES NQ session. So, like I said, I really have been focusing on the larger time frames as it just really cuts down on the noise. Okay, and this is preference. It helps me. Will it help you? I'm not sure, but it doesn't hurt to try. So I look at 4 hour, 690 minute, and 1 hour on futures, and then on stocks, I look at the 195 minute all the time. So that really helps me because similar to the 690 minute, the 195 minute is the same deal for equities. It just breaks down the day in half without the extended hours data. So, like I said, that's just something to look at. So, on the weekly chart, we can see that ES was able to close above 3 overlapping support areas, okay? As always, confluence is key. When you have different areas of support overlapping, it gives much more strength to that particular area, okay? That is key. So I showed you guys the pink line was prior resistance. We'll go to a daily chart, right? It was prior resistance back there. And then, I was assuming that it would become support. Then we have this parallel channel, right? Judging based off of these two resistances, it basically just gives an equal, angle. So we could see, that acted as support, and then we can speculate that, down here would act as support. And then this black line is from years ago. It's acted as crucial resistance, right? Resistance here, resistance here, resistance there, and then it became support, right? You could see once ES got above, pulled back, acted as support. So then, that also lined up, and that's something new that I found. So I'm always playing around with charts. I enjoy, it's a hobby to chart different equities and futures. So, I'm always finding different opportunities. So, like I said, you could see multiple times resistance, 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 even back to, 2015, 14. So that's a very, 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 very long term important trend line. So I do like how all three line up. So, like I said, if you look at the daily, you could see that this candle on May 11th actually broke below all three, and then we continued to fall on May 12th, where we made the low. So that got very uncomfortable for me. I was down well over a million on my ES trade at that point. Like I said, it's all relative. A million to me might be 300 for you guys, right? So I'm not saying that to, come off as cocky. I'm just telling you that, you got to look at it from a different perspective. But it still did get a little uncomfortable considering I wanted to see the bounce happen at 39.50-ish, and then price was actually, about 100 points against where I wanted to see the quote unquote bottom, be put in. So the reason that I stuck to my long thesis and my long position is because of the VIX. I've been putting so much emphasis on the VIX lately, okay? It's just been so clear, the divergence. So, like I said, the reason I stuck to my thesis is because the VIX was just so weak. It's been lagging more than I've ever personally seen it since day one trading, especially, since the start of me watching the VIX. I've never, ever seen it lag on so many different time frames. I've seen it lag, countless times on intraday, price action, but I've never seen it lag to this extent on like the daily chart, the weekly chart, so on and so forth. So we'll talk about that again. So I do like how the weekly chart held and was able to, close the weekly candle above all three levels of confluence. So that is very, very, very important. Okay, so on to the VIX. Okay, so let's look at this. Okay, so as I showed you guys last video, right, last introduction video from last week, I showed you guys 3 lows, or we could do 4 too. So there's 4 important lows on ES starting with January 24th, okay? So ES continues to make lower lows, okay? So from January 24th, right, it makes a lower low on February 24th, then it makes a lower low on May 2nd, and then another lower low on May 12th, right? As you can see, based where I put these, these arrows, each low is lower than the previous low, okay? That is bearish. Technically, keyword technically, the VIX should be making higher highs when ES is making lower lows, especially on larger time frames. Okay? Like I said, I see a lot of divergences in intraday, right? 5 minute, 15 minute, 30 minute, 1 hour. It's very common. But to happen this clearly on larger time frames, I have personally never seen it since day one, okay? So starting on January 24th again, we can see that going forward, the VIX has been making lower highs, right? As you could see based on this trend line, it has been in a downtrend with the highs. So that divergence is so clear. And that's what helped me stick to my thesis despite being down over $1 million. Okay? Like I said, it was painful because I wanted the low to be 39.50-ish. All right, those three different levels of confluence that we just looked at right there. So when on this day, May 12th, it was breaking through that and heading down, to 38.55, the VIX was just not moving, and I was just like, oh my gosh, like it was really helping me just stick with the thesis. Now, if the VIX was exploding on that particular day, I probably would have stopped out. Okay? But like I said, I did not stop out because the VIX was just screaming that it was weak. And when the VIX is weak, it indicates that the sell-off is getting exhausted. Okay? That is what the discrepancy highlights. Okay? So a lot of people ask me questions like, yo, what do you mean by the VIX lagging? Like, what does that tell you? It tells me that the sell-off is getting exhausted and ES should, reverse and move higher. Right? Does it work 10 out of 10 times? No. But when I see very, 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 very clear divergences, I pay attention. So I saw some people in the group also looking at, in our chat room, also looking at, this support too, right? You could see it's bounced at that trend line. So that's another thing to look at. So moving on, like I said, so the VIX, right? Over here. Okay. So I showed you guys this pattern on the VIX. I'm using VIX because it looks cleaner than the futures. So not only do we see the lower highs, right? This is what I showed you. This, I don't know what you want to call it, smiley face pattern is like almost too good to be true. I mean, it's like perfect, right? You could see how perfectly the VIX respects these smiley face, bottoming pattern, whatever the hell you want to call it. So essentially, maybe the VIX wants to head back down to test this lower smiley face. That would be great. If it does get down there, I'll exit the full long, 100%, right? Because this is a great, gauge to where the overall market goes next. So like I said, if this heads down to this bottom smiley face, I'll gladly exit my longs, hopefully for a nice profit. But this is something that I've been looking at. Ideally, bulls do not want a weekly candle close above this trend line. So you could see 1, 2, 3, 4, 5 different weeks it has acted as clear resistance. So like I said, if we get a weekly candle above that trend line, I may have to stop out of the long, but like I said, I'll see where we're at if and when that happens. So I told some members that were asking me, people were saying like, yo, like, why do you think the VIX is lagging to this extent? And I personally really didn't have an answer. I was kind of scouring the web to see if I saw something, but I didn't see anything. So on last Thursday, I went out with some of the guys at my, that trade in my office, some of the professional traders that trade in my office. And one of the guys, he doesn't come into the office much anymore. He just kind of trades from home. He lives in a really nice apartment in Manhattan. And he's a phenomenal trader. I mean, this guy is just, he could be one of the best traders in the United States in regards to commodities. He actually was telling me that he's one of the largest VIX traders. Because I was asking him, I was like, yeah, like, what's your favorite thing to trade? And he was like, oh, well, considering I'm one of the largest VIX traders, that's got to be up there. And I said, what do you mean you're one of the largest VIX traders? And he said, by volume traded, he's like top 10 VIX traders in the freaking country. And I was just like, what the fuck? Like, think about that. Like, that's a flex and a half. I'm sitting over there like, no way. I'm 3 feet away from one of the largest VIX traders in the United States. So I was like, holy shit, let me ask this guy what he thinks. So I was like, yo, what do you think of, the divergence? And I was showing him like the higher lows and the or the lower lows versus the lower highs. And he, didn't have a like a definitive answer, but he believes this is what I'm just gonna quote what he said. He said that the sell-off on ES has been orderly. Okay, so we don't have the sell-off that we saw in COVID, right? So the COVID drop was very quick, okay? We had very, very large down moves. And then look at this volume compared to this, okay? Right, so during the COVID drop, it was panic, totally panic, capitulation, downfall, like just straight down. I mean, don't get me wrong, we had a few bounces, but it was very, very quick and aggressive. Now, he said it's more orderly. So this down move, look at the volume, right? It's like very consistent with what we've been seeing even on the uptrend, right? Look at the difference between this compared to this, right? And then this compared to this, right? So, we go down, up, down, up, down. So even the big, big drops that we have seen, the volume isn't, that panicky, right? So there's not a ton of fear, okay? We have, some recession talks, trending on Google and stuff like that, but it's not like when we saw COVID, people were dying left and right, hospitals were getting filled up. There was just a lot more fear. So he believes that because this sell-off is much more orderly and less panicky, that's one of the reasons. And then he also said that the market makers could have been, kind of jacking up the volatility, kind of pricing in some of the fundamental things that are happening with the Fed, right? The monetary policy, the tightening. So he believes that they could have been pricing in the VIX already, prior, right? We've seen that options premiums are very, very inflated. So he said that's another reason how the VIX can just already be priced in, prior to this down move. So he was talking about a few different things, but he said it is something to pay attention to. And it's funny, just a quick note. So I want to go over. I took like 5 or 6 trades last week. Very good trades that I want to go over. I'm gonna post that video this week, going over last week's trades. The VIX was one of them. So this guy, let's just call him Paul, right? The VIX trader. The traders in my office all talk throughout the day, and they kind of give one another color. And Paul, like I said, he doesn't come into the office, but they all do like a Zoom call for the people that are not in the office. And I was telling the people on the Zoom call, I was like, yo, the VIX futures I was talking about, VIX futures should pop above 34. I would show you my chart right now, but I don't have TOS up. Um, so Paul was like, "Oh, you think it's gonna explode over 34?" And I was like, "Yeah, I do." So at this time, the VIX was closer to 33. He's like, "Oh, like what do you think it goes down to?" And I was like, "Honestly, I think it goes back to under 30." So essentially, it was a really really nice risk to reward, right? Stop loss above 34, call it 34.2, and then targeting 30 and below. Like I said, very nice risk to reward. I'll go over that particular trade. So all of a sudden, I hear Paul. I didn't know he was actually putting money where my mouth was, but he's like, all right, that sounds good to me. He was like, yo, Dylan, I just shorted 400 lots of VIX, and I'm sitting there like 400. You guys look up the margin requirements for that, and you will be in awe. 400 lots of VIX. The fact that he just nonchalantly said, all right, sounds good, risk reward. I just shorted 400 lots. And I'm sitting there like, what the hell? So crazy. Like I said, it's just a little fun fact, but I do plan on going over those trades and I will post it this week. I don't want to give you a definitive date, but I will post it. So I took a trade I took that trade with him, VIX futures. I took a trade on wheat, took a trade on RBOB, gasoline, and a few other things. So I'll definitely post that. But that's where I stand as of right now. I'll let you guys know if I change anything or come up with anything new. And as always, feedback is greatly appreciated. Peace.